Kenyan investors have been allocated up to 60% of the shares in the Kenya Pipeline Company, KPC, stock sale that opened this week, marking a significant milestone in the country's capital markets and state asset divestiture strategy, the landmark initial public offering. The KPC IPO, which began on January 19, 2026, offers 11.81 billion shares at 9 shillings each and is set to run until February 19, 2026. If fully subscribed, the government anticipates raising approximately 106.3 billion shillings from the transaction. Sale represents 65% of KPC's issued shares, with the government retaining the remaining 35%. At current valuation levels, this positions KPC as one of the largest firms on the Nairobi Securities Exchange (NSE), behind stalwarts such as Safaricom Equity Group and KCB Group Allocation Structure and Priority. The government has structured the IPO to promote broad ownership. Local retail investors, 20%. Local institutional investors, 20%. Oil marketing companies operating in Kenya, 15%. KPC employees, 5%, approximately 590.63 million shares. Foreign investors, 20%. East African Community, EAC investors, 20%. This allocation formula aims to strike a balance between local participation and broader regional and international investment, while ensuring that employees benefit directly from the listing in the event of undersubscription in any investor category. The shares will be reallocated according to a specified priority order, starting with local retail and institutional investors, followed by EAC and international investors, and finally oil marketing companies. In cases of oversubscription, Kenyan investors are given priority, underscoring the government's emphasis on domestic ownership. Why this IPO matters. The KPC listing is the first major government company divestiture through the stock market in nearly 18 years, with the last comparable offering being the Safaricom IPO in 2008. At 106.3 billion shillings, it could become the largest IPO in Kenya and East Africa if fully subscribed, surpassing the 51 billion shillings raised during the Safaricom sale. Strategically, the government plans to channel the bulk of the proceeds into national development programs, including infrastructure, while also broadening public participation in share ownership for Kenyan investors, whether individuals, institutions, or workers in the oil sector. This IPO presents a rare chance to own a slice of one of the country's most critical energy infrastructure companies. The offer's generous local allocation and priority rules further enhance its appeal to domestic capital market participants.